if you would.
Well, this is part of the reason why I am concerned about the current situation, and why I made reference in my remarks to the fact that currently about half of the unemployed have been unemployed for 6 months or more. So in terms of long-term unemployment, this is the worst labor market, the worst episode since the Great Depression. Of course, long-term unemployment is very stressful for the unemployed and their families, so being without income or reduced income for such a long period of time. But even from the perspective of economic growth and stability, as we've seen in other countries, people who are unemployed for a long period of time often see their skills atrophy, or see their skills become irrelevant to the new economy, or the economic the way the economy is developing, or they may become demoralized, and may become separated from the labor market, and indeed long-term unemployment sometimes become essentially permanent unemployment. Yeah. So not only for the sake of the unemployed and for the short-term strength of the economy, but also for our long-term viability and international competitiveness, I think we need to be very seriously concerned about the implications of long-term unemployment for skills, for labor force attachment, for long-term earnings and employment opportunities.
Well, I appreciate that, and obviously that's the point I was trying to make here. And your point is that there's enough empirical data on this and other examples that have occurred, so that's not mere speculation about what can happen in terms of job skill levels and the ability of people then to recover and get back on their feet individually, but overall the economy of the country.
I'm going to tell people here on the tape that this labor market is the worst one. This U.S. unemployment is at its worst ever, the labor market, since the Great Depression, folks. And I can tell you that some of the gimmicks that are within these statements, I can hear in a man's voice who is very worried and troubled. These are things that we have told people at stockmarketfunding.com for the last couple of years, but more importantly is that what drove everything higher can certainly go lower. One of the things that we're going to talk about is the federal funds rate of 0 to 1/4% where called for. Well, let me tell you, the next gimmick would be if the money market rates went to negative or 0, that's going to want to pull your money out and pull that into the equity market, because you would get a higher yielding transaction. And there are many, many, many more things that we know that's in here. And we did provide you with some of the live testimony. And we're approaching 11:40 a.m. Pacific Standard Time. So we're going to conclude this. If you want to learn more, just come and visit stockmarketfunding.com. We do many things. We make money on failure. We make money on success. We make money on both. It doesn't matter. What does matter is the skill and the wisdom to know the difference. And basically on Saturday mornings, come and log in at the SMF radio talk show, SMF Eye on the Economy. Right now we're in the earnings season. Apple sold off today. You can see our earnings after hours reports and live video trades, things that we were doing throughout the day. Feel free to get to know us. Remember, Main Street is welcome at SMF Street. However, I don't think that Main Street wants any more Wall Street. Well, there is a middle ground, and that's right here, SMF Street. And you can take advantage of failures and make a lot of money on failed systems that people do, like the Obama administration, and maybe Mr. Bernanke is very worried. You can make money on great, successful policies when the public likes it. And so what we are going to say is that there's a lot of risk in the overall structure. When it comes to the stock market, though, if they can pull off a negative interest rate to pull money out of money market funds back into equities, because you would get a higher yield. So now, whether that actually happens or not is yet to be determined. Anyway, thank you very much. Enjoy your day.